Hey everyone, and welcome back to another video for today. So in today's video, let's talk about SoFi. We've got a price target update. We've got Chime going public today at around $11 to $12 billion in market cap. And remember, SoFi at the moment is at $16.6 billion in market cap. Yesterday went back over $15. Right now, pre-market, we are just below $15. We have also a couple of other things I want to touch on in this video. So if you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And a special thanks to FinChat for sponsoring this video. All right, let's start off with the small details that you need to know. You can now get an increase on your savings with limited time APY boost and no account fees. Now, important to note that these are only for new accounts that are being opened. So if you've seen this and everybody saying, oh, we're back to 4, no, only new accounts. Important to note. Then we have here a new analyst that initiate a SoFi coverage with an overweight rating and a $20 price target. The firm recommends specialty finance stocks with funding advantages and superior customer acquisition models, saying these companies are the most insulated from economic downturns and heightened competition. The analyst likes SoFi's diversified growth platform and productivity loop. The company's growth prospect remains strong and its mix to fee-based revenues will drive multiple expansions, the analyst tells investors in a research note. I mean, I guess new analysts, new fresh ideas, not the old one, always the same thing. No, got a new analyst here looking at SoFi in a very different way, actually in a way that we've been looking at SoFi for a long time. Then we have here Invest America, the CEO Council. So you have Michael Dell from Dell, Lisa Su from AMD, Mark Benioff from Salesforce, Dara from Uber. You've got here the Zillow CEO, the Heritage Group CEO, iHeart Group CEO, and then Anthony Noto, CEO of SoFi. And he said the following: the Invest America 24 Act is a transformative initiative that can empower every family with tools to build a secure financial future for their children. Every newborn will receive a funded investment account so they can benefit from compounding growth, which will expand economic inclusion and help more people build financial independence to reach their ambitions. At SoFi, we're here for members through every step of their financial lives, and this is a way to start helping at day one. With the creation of tax-advantaged early childhood accounts, either the government or perhaps SoFi would fund accounts for SoFi employees newborn, and we will welcome the opportunity to enable other companies to do the same for their employees. Of course, we've had others out there as well, such as Vlatenev from Robinhood, but I don't think he sits on the CEO Council, but Robinhood is definitely part of this initiative. Great initiative, because this basically means that you are including yourself in the success of America. You're part of the success of America. You're part of that capitalism, right? Maybe some people say that capitalism has failed them because they do not participate in the success of the companies, in the success of the country. And this will hopefully change that. Now, more recently, we've had a couple of analyst conferences, right, for SoFi and for other companies as well. So it's quite difficult to follow all of them. But luckily on FinChat, proud sponsor of the channel, it's a stock research platform. And this is the magic behind the AI summaries for all of the transcripts, right? So we've got the Mizuho Technology Conference. This happened a couple of days ago. You didn't have time to run through all of it, so you just click on AI summary and you get your answers. You basically get the key financial highlights of that whole conference. And if you really want to ask specific questions, so let's ask it, for example, what did they say about macro and the expectations for the remainder of the year? You can ask that question. We run through the transcript and voila, we have here our answer. So CFO Chris Lapointe expressed a positive outlook on the business and the health of its member base despite broader macroeconomic volatility. He stated that the company has never felt better about its business than it does today. SoFi sees really positive trends with its member base, which remains extremely healthy. Key metrics like FICO scores average around 750 and average income of $130,000 to $160,000 of borrowers support this assessment. The company also reported declining net charge-off rates in both personal loans and student loan refinancing business for 2 consecutive quarters. Loss curves are meaningfully below the life of loan loss tolerance of 7 to 8%, and the gap between recent vintages and that tolerance has widened for 2 consecutive quarters. So again, on the macro and on SoFi's guidance, they are quite positive. They even said the following thing. Loan platform business generated $380 million of annualized high-quality margin revenue in Q1, signed contracts with over $8 billion of loan volume year to date for the loan platform business, $7.2 billion of originations across the business in Q1. That's up 66% year over year. They also expect that the loan platform business should be at $1 billion annualized revenue run rate. Again, high margin, fee-based, lower risk type of revenue. This is going to be great for SoFi, and as the analyst has said, this can drive and will probably drive multiple expansion for a company like SoFi. And just a small reminder, Wall Street still expects SoFi to generate only around 30 cents of EPS in this year, 50 cents next year, and 70 cents in fiscal 2027. Still far below what SoFi themselves think they'll generate in this fiscal year, in the next one, and probably the one after that as well. So yes, Wall Street is still behind. So when you look at those estimates, just remember that when you look at the metrics, forward PEs or whatever, those are based on analyst estimates. As those analyst estimates go up or down, those metrics will go up or down as well, if of course the stock price stays the same. If we go up a lot, then of course you go up a lot with your pricing metrics. If we go down a lot, then that comes down as well. And of course, all of this and more, such as segments and KPIs, can be found on FinChat. Link will be down in the description. You can get 15% off. If you're a new user, you'll get 2 weeks of FinChat Pro for free. So go check them out. Moving on to Chime. So Chime is going public today. Chime is going public at around $11 to $12 billion. Wouldn't be surprised if we open up way higher than that. And that could be a good thing for SoFi, because as you will see, if we compare SoFi to Chime, I know it's not apples to apples, but Wall Street can start comparing those two companies. I think that could push SoFi's valuation higher and higher. So the products that Chime offers, spending, so checking account, Chime debit card, ATM, etc., liquidity, credit building, savings and perks, a community aspect, and support and safety. Here you see the average revenue per active member. So yes, the trend is that it is going up, but it is heavily reliant on, I would say, spending. As for members, 8.6 million members, so less than SoFi, but yes, I don't think we can say it's apples to apples. 82% active member growth since Q1 2022 and 67% primary account relationships. As for engagement, $121 billion in purchase volume, 54 monthly transactions per active accounts. Unit economics, they see here $251 average revenue per active member, as you can see right here, 88% gross margin and 67% transaction margin. Now, here we can actually look at the growth rates where revenue, gross profit, gross margin, transaction profit, and all of that for the last couple of years. And of course, the last quarter compared to the same quarter last year. So revenue did increase by around 60% since 2022. Gross profit did increase quite nicely. I'll show you the growth rates in a bit. Gross margin did increase. We went from 79% to 88% in a matter of 2 years. Net income still negative for the whole year, although that did flip over the last quarter. As you can see right here, net income did flip. Net margin was 4% in 2024, and now it was 2% as of the end of last quarter. And so this is basically what we got. So from 2022 to 2023, revenue increased by 26.7%. Then we actually see a reacceleration, 30.9% year over year growth. Same for gross profit, 33.3% year over year growth, 22 to 23, and then 38.5% year over year growth from 23 to 2024. As for total operating expenses, that only increased 1.7% from 22 to 23, but it did increase 18.1% from 2023 to 2024. As for shares outstanding, that did increase by 9% from 2022 to 2023, and then another 2.9% for the last year. Now, Tanner here from Future Investing did a nice comparison. SoFi's 3-year CAGR revenue-wise compared to Chime. As you can see, SoFi growing faster than Chime. As for adjusted EBITDA for SoFi is of course higher than Chime. Looking at the margins, SoFi currently is also higher than Chime. Looking at net income, well, as of last quarter, you can see here, this is Chime, that little green square rectangle right now. It did turn positive, while SoFi has been positive for a couple of quarters already. And then, of course, margin-wise, SoFi is still at the moment higher than Chime. Now, Chime could of course, if things continue, could have higher margins just because of the structure of their business and just because of the structure of SoFi's business as well. But if SoFi continues to increase the mix of their business, if we have more and more high margin fee-based revenue coming in, wouldn't surprise me if SoFi keeps the lead for a long time. And remember what SoFi told us in the last couple of conferences, right? When we talk about the technology platform, they still expect around 10 deals to be generating revenue in the first quarter of 2026 that did not generate revenue in the first quarter of 2025. And so while it is true that the tech platform's growth was, I'd say, non-existent over a couple of quarters, same for contribution profit, while the financial services side revenue and contribution profit continues to go up, in 2026 we will have both of those segments actually contribute quite significantly to the overall SoFi business. And so here again, I just don't think that Wall Street is prepared for that. Wall Street has been behind, right? SoFi keeps beating and raising, and yet the market doesn't react. Maybe the market still doesn't believe that SoFi can deliver. So far, I don't think that I should doubt management. But let's see what happens. I think Chime going public is going to help SoFi, plus it's another fintech company that we might start to follow because it could be quite interesting to see what they're saying compared to what SoFi is saying, compared to what another fintech player out there is saying. Maybe one will show strength while the other will show weakness. That could also be the case. So anyway, that's all I've got for you right now. See you in the live stream. Like, subscribe, all of that. Check out FinChat as well, and I see you all in the next one. Bye-bye.